joined once again by Manisha Thakor, personal finance expert and author of Get Financially Naked. In this segment, Manisha joins us to answer some viewer questions. All right, Manisha, thanks so much for sticking around. The first question comes from James, and he writes in asking, did I hear right that my Stafford subsidized and unsubsidized will disappear after 20 years due to some new government rule? Wow, that sounds nice.
Yeah, I wish it were true that your student loans were going to evaporate, but unfortunately it is not. But there is a new program, the Income-Based Repayment Plan, IBR for short. And for folks who do qualify, your payments would be capped at 10% of your income for 25 years. And at the end of 25 years, any outstanding principal would be forgiven, but there are a whole host of fine print that you need to read through to see if you qualify, and the best place to find out is at ibrinfo.gov, and that's where you can find out.
All right, ibrinfo.gov. Okay, great advice.
I'm sorry, ibrinfo.org. Sorry.
Okay, ibrinfo.org. That's great advice for James. Hopefully he's watching. All right, and now Marissa sends her question in via Facebook. She writes, my credit card company keeps lowering my limit. I don't use it much. Should I just cancel it for good? And if so, will it hurt my credit rating? We get a lot of similar questions. What would you say, Manisha?
Yeah, Marissa, I would cancel it if it is not your longest standing credit card. My feeling is more and more credit companies are going to start charging you for lack of use on your card, and I encourage people to have at most 2 or 3 credit cards. So I would say close it down.
That sounds good. All right, now we have another Facebook question, this one from Brenda. She writes in asking, I am 19 years old and want to know at what point should I start investing if I don't want to lose any money. Investing is certainly on a lot of people's minds.
Brenda, I want to hug you for asking that question the way you asked it, because it enables me to highlight a key point. You want to invest without losing any money. And unfortunately, those two things don't go hand in hand. The whole point of investing is you take on some risk with a hope, but not the guarantee that you're going to get a return. But you're young. So my advice to you is if you work for an employer that has a 401k or 403b, max it out. If not, start putting money in an IRA. You can use a target date retirement fund, but make sure you know that there is no guarantee when it comes to investing.
All right. And we have a tweet now from Graydon. He tweets, is there a best time of the year to invest in stocks? That is a good question. I guess it would be when the stock market is low, right? When it's down.
Thursday would have been the best time of the year last week. So it's an interesting question. Traders often say sell in May and go away, and that just refers to a kind of historical pattern where stocks have tended to drop in the spring, oftentimes as traders head off for summer vacations and want to lock in gains on their positions. The early parts of the fall historically have also been choppy. Generally speaking, the market has tended to do better between November and April. But if you're at all nervous, dollar cost averaging, putting a little bit in each month is a great way to not even have to worry about the question.
All right, and what about people who, saw the crazy stock market over the past week? We saw these crazy dips and it came back up. Were there people who would say, hey, look, it went down 1,000 points, now's the time to get in, but you can't get in that quickly if it goes down and up in one day, can you?
You can't unless you are using limit orders. And so what's interesting is some people who had placed limit orders actually lucked out and were able, as the market was going down, to have those executed.
But you've got to have done that ahead of time?
You have to, exactly. You would have had to, so let's say you wanted to say, I wanted to buy stock X if it hits 52 and it's currently trading at 56. And as the market went down and it briefly hit that level at which you'd put your limit in, you got executed.
You got it. You were
in a good way.
One of the lucky ones. That's right. All right. So finally, Danielle writes in, I'm 29 years old, married for 2 years with a 7-month-old daughter. We have $10,000 in student loans at 2% interest and a $10,000 in a car loan at 4.5% interest. We want to buy a house someday. We have an extra $500 to save each month. Where should it go? This is an excellent question. What would you tell Danielle? We don't have a lot of time.
I'd split it, 200 towards the car and then 100 towards each of the other 3 goals, more towards the car because it's a depreciating asset and it probably has the highest interest rate.
But at least Danielle is thinking about where to invest that money. That's great. All right, Manisha, thank you so much for taking the time to answer our viewer questions today.
Thanks for having me, Tanya.